Hello everyone. In the previous weekend, I had uploaded a video where I had shared my views on which future group stock to buy at this point to benefit from the deal or the merger and the Reliance deal. Okay, so based on the swap ratios that they have announced and the current share prices of each of the future group companies. So I already shared the calculations and the details of the deal with Reliance. So please have a look if you haven't seen that video before this. And now in this particular video, what I'll be discussing is what could be the future of whatever remains with future group. Okay, whether the investors should sell out after the merger is done, or whether they should hold on to it and there could be better days ahead. Whether Kishore Biyani can make this business fly again. Okay, so let's discuss these important questions in this particular video. Before we start, let's see what remains with the future group, what business remains with the future group after the deal with Reliance is done. So firstly, there will be only one company remaining out of the six currently out there in the market. That company is Future Enterprises. All other Future Group companies will be merged into this company as a part of the deal with Reliance. Okay, so after the merger, what Reliance will be doing is it will be acquiring all the retail, warehousing, wholesale, and logistics operations of Future Group, and they'll be paying a portion of the amount as its price, and also taking over certain debt and other liabilities of those businesses. Okay, so what business remains with Future Group is basically the non-retail part. So it comprises mainly of the production of FMCG goods and also the sourcing and manufacturing of garments as well. So these are quite substantial businesses. They are not very tiny businesses. They do have substantial revenue. If you see the FY20 revenue for the FMCG products business itself was over 4,000 crores, and that for the garments business was also over 3,000 crores. So together they have a revenue of over 7,000 crores as of now, and there is a huge growth potential in both these businesses in the coming years. So these businesses were not visible to most of us. We as outsiders or as consumers, we only saw the stores in operation, and we thought that only those stores were the business part of Future Group. But behind the scenes, behind these stores, they had invested substantially in the production of these goods, FMCG goods, as well as these garments. Okay, so this is a good future possibility for this group, this business ahead. Apart from these production of FMCG goods and the garments business, apart from this, Future Enterprises will also have an insurance joint venture in it, the Future Generali life insurance as well as general insurance joint ventures. And apart from that, there is another joint venture with NTC for development of two mill lands in Mumbai. So these two joint ventures could add value via unlocking a stake sale, maybe in the next couple of years time. Okay, now let's discuss what could be the possible growth strategy for Future Enterprises in the coming years. Now, until now, whatever FMCG products they manufactured or the garments they made or sourced, they were selling these products only through their own outlets. That is the Big Bazaar chain of stores, or FBB or Central or Brand Factory, like that. So these products were sold only through these outlets. Now, after this deal is done, there is no such restriction now, and they will be able to sell these products through the entire Big Bazaar chain as well as through the Reliance retail network. Okay, Reliance Retail has over 10,000 stores in their network, and out of these, maybe around 1,000 stores of Reliance Smart, which are like Big Bazaar stores, and another hundreds of stores of Reliance Trends, which are for the garments sale. Okay, so all these stores will also start stocking Future Enterprises products. Now, why will Reliance do this? If the question somebody has in mind, why will Reliance continue to support Future Enterprises in coming months or years? The main reason is Reliance Retail will be acquiring 13% stake in Future Enterprises as a part of this deal. and as part owners of this company, they would certainly love to see better days for future enterprises in the coming years ahead. So they will certainly encourage stock more sales of future enterprises products through their own networks. Okay. So apart from the Reliance network, the JioMart platform will also be available for future group products. Apart from this, as the part of the non-compete clause, this does not restrict Kishore Biani from selling his products through the general trade as well. That is, the Kirana stores spread across the country, or the mom and pop stores also in several cities and towns. So these are available for sale of his products. Apart from that, there is a possibility that he could be selling his products through the e-commerce platforms as well, like Big Basket and Grofers for the food products or the FMCG products, and Flipkart and Myntra or Amazon for the garments business as well. Okay, so these are certainly huge opportunities available for growth for sale of future enterprises products. And Kishore Biani, being a true businessman, we have seen his abilities, we have seen his success over the last 20 years. He did make a few mistakes, and because of which he had to sell his retail business, but we cannot write him off. He is a risk taker, and he can certainly make good use of the opportunities available to him, and experience that he has built over the last 15-20 years. So we can certainly count on his abilities, his experience, to make something good out of whatever remains with him. Okay, I am at least counting on that part. What could be the potential valuation for future enterprises? After the completion of the merger, the issue of shares to all the shareholders of the other future group companies, and then issue of fresh shares to Reliance Retail as part of the investment of 2,800 crores that they will be making in future enterprises. After all these issue of shares, the future enterprises equity base will expand from 49 crore shares today to over 1,200 crore shares after all these issuances are done. Okay, so that is a very big, huge equity dilution happening, or equity expansion happening. But obviously the reasons for that, all these businesses are getting merged into it, and then the sale is happening. So as a part of the deal, what Future Enterprises receives is 5,600 crores in cash and another 2,800 crores of investment for the 13% stake for from Reliance Retail. So together this 8,400 crores, and whatever the debt portion and other liabilities that get transferred to Reliance Retail as part of the deal will result in a reduction of its net debt to just 2,300 crores. Still, this is not a very tiny figure, but still a manageable figure, I think. With the kind of business size that remains with the future enterprises, I think it can easily take care of this remaining debt portion, and with the capital that it has, I think and the growth opportunities that it has, it can certainly look forward to reducing this debt in the coming years as well. Now, at the price that Reliance is investing in future enterprises, the price is 17.65 rupees a share. At this price, the equity portion of future enterprises is valued at over 21,000 crores. Okay. Currently, the share price is at a 15-20% discount to that, around 14.5 rupees a share. But at 17.65, if we consider, the value of future enterprises will be 21,000 crores, the equity value, I mean. And both, obviously, if Reliance is investing in this at this price, then it certainly thinks that there is a brighter future ahead in the coming years to. And both me as well as Reliance think that this is a certain possibility that future enterprises will see much better days in the coming years. Now, if future enterprises does manage to grow at 20% year on year, especially for its FMCG business, it's pretty confident. In the presentation they have mentioned that they can certainly grow at over 20% per annum for both their FMCG as well as the garments business for the next few years. But if they do manage to grow at this pace, and with that there could be a certain improvement of margins, then the FMCG business alone could be worth over 30,000 crores in the next 1 or 2 years. So that is a fairly good appreciation possibility from the current market cap of well under 20,000 crores. This FMCG business alone could be worth more than 2 times of that. Together with the garments business, the total market cap of future enterprises could certainly scale up to over 50,000 crores in the next 1 or 2 years. Remember, the garments business already enjoys a higher operating profit margin compared to the FMCG business, and with now a pure focus on this garment sourcing and manufacturing business as well as the FMCG products business, we could see future enterprises improving the margins substantially in the coming quarters. Okay, after the entire deal is done, their focus will be on growth of revenues as well as improvement in margins. So we could see profit margins improving substantially from the current levels. So 50,000 crores or more than 50,000 crores of market cap for future enterprises is quite a healthy possibility in the next 1 or 2 years. Apart from this, there could be some money coming in for the insurance sale of stake in the insurance joint venture as well, or even the development of land rights that they have in the joint venture with NTC. So these could both these things could add more value to future enterprises, though that may not be very big numbers, but maybe a couple of thousand crores here or there. So even if we calculate at 50,000 crores of market cap, the effective share price of future enterprises could be in the range of rupees 40 to 50 in the next 1 or 2 years. So if future enterprise does manage to scale its business as expected, we could see the share price rising up to over 40 rupees level in the next 1 or 2 years. So that's a fairly good appreciation even from the current price of 14.5 rupees. Okay, we could see it tripling in the next couple of years time. So if somebody wants to benefit from this possibility and they would like to invest now, that is before merger, then what I recommend is to buy shares of Future Lifestyle instead of buying shares of Future Enterprises. I have already shared the calculations in the previous video, but I'll further tell you an example with an example here. Currently, the share price of Future Lifestyle is 104, whereas the share price of Future Enterprises is at 14.5 rupees. But based on the swap ratio, there will be a shareholder will be getting 116 shares of Future Enterprises for every 10 shares of Future Lifestyle. Okay, so if we buy 100 shares of Future Lifestyle today, the investment required will be just 10,400 rupees. After the merger is done, these 100 shares of Future Lifestyle will get converted into 1,160 shares of Future Enterprises. Even at today's price, these 1,160 shares will be worth over 16,000 rupees. So that is a fairly good 60% appreciation possibility already. And if the future enterprise share price does climb to the expected level of 40 rupees in the next 1 or 2 years, that this investment of 10,000 rupees will be worth over 46,000 in the next couple of years time. So this is a certain possibility depending on how well future enterprise manages to grow its FMCG and garments business in the coming years. So I'm counting on Kishore Biyani's abilities to rise up again from the ashes, and I believe that he can make this business fly again.